Hello and welcome. In this video, I'm sharing what are the situations where an NRI can receive a tax notice in India, right? Okay, so, just a background to this is that in the income tax law, there is a rule 114E whereby financial institutions need to report certain significant transactions to the income tax department, right? So that is like a mandatory rule. The financial institution, for example, ICICI Bank or HDFC Bank or HDFC Mutual Fund, they need to report certain transactions to the income tax department if they cross beyond a specific threshold. Now they that particular transactions form the base for the income tax department to further scrutinize and send tax notices, right? And one of the major reason is that against a particular pan, if there is a significant transaction that has been reported to the income tax department and there is no return filed against that particular uh, pan, so that's a like clear cut instance that you may receive a tax notice that you have not filed the tax return. Now this particular requirement is applicable to all. So it's not only that it's applicable to non-residents only, it is applicable to all. So the important thing to understand is that even though you are a non-resident, right, it doesn't mean that you can escape the provisions of the law, right? Any investments in India, any credits to any of the accounts, even to a NRE account, right? Any credits, any remittances that you send, these are all, say, understand, these are all Indian accounts. Income tax department is like all the data, the analytics and all becoming is so strong that they are able to track these transactions that you're doing, right? And the requirements for the thresholds are aggregate across accounts, right? Now, trigger in the most of the cases, the trigger is that the person has done a significant transaction. For example, you've bought a property for 1 crore in India in the financial year, and that gets reported to the income tax department because of rule 114E, and you have not you've not filed the return, or you for example, if you have a rental income from a property, you have not disclosed the rental income in the tax return, so automatically the tax notice will be sent. Now, what are the transactions that are need to be reported? Now, there are certain transactions where the trigger happens only when the payments has been made in cash, right? So, first is like payments made in cash or purchase of bank drafts, pay order, banker's check. If you make payments in cash more than 10 lakhs for bank draft, pay order, banker's check, that becomes a trigger, right? That transaction will be reported to the income tax department. Now, understand this, that just because the information has been sent to the income tax department doesn't mean that income tax department will kind of levy any tax, or it doesn't also mean that you have to disclose any income, right? If there is no income to be disclosed, there is no income to be disclosed. Only thing is that there may be a to and fro between between you and the income tax department with respect of these transactions. They might ask you to provide more details, and if you provide more details, then there is no problem, right? But yes, you have to be careful, especially careful if you have these transactions during the financial year in India. See, because the problem is that you are not in India, you are based out of India, right? So for example, you are based in US, your more interest and more attention is towards the US investments and all these things. However, if you have any such transaction, it can trigger a kind of a tax scrutiny or something in India. So you need to be careful that you maintain proper documentation, file the proper tax return in India, right? So generally, we are more interested in making the investments and everything, and remitting money, and but we don't take care of these tax aspects. And later on, these things only lead to penalties and everything. So we want to avoid that. Next is payment made in cash for purchase of any prepaid instruments. For example, for more than 10 lakhs. For example, you have a forex card, a prepaid card, and you load like more than 10 lakhs in cash. So that can get triggered. Then cash deposits or cash withdrawals, including through bearer's check, in or from any current account more than 50 lakhs. Right? Cash deposit withdrawal more than 50 lakhs in a current account, that can trigger. Then cash deposits more than 10 lakhs in one or more accounts other than a current account and time deposit. Right? Other than a current account and time deposit means any bank account. Right? Any account you have, if you deposit cash of 10 lakhs it can trigger a reporting requirement. Then any new time deposits that you make, any fixed deposit that you make more than 10 lakhs, right, which includes any even NRE fixed deposits, right, this can trigger. Then credit card bills paid in cash more than 1 lakh or other mode more than 10 lakhs. If you have a credit card bill, if you pay in cash more than 1 lakh, that can trigger. Or any other mode, if you pay online, but the total bill for the financial year across all your credit cards is more than 10 lakhs, right? It can trigger. Then purchase of new bonds, debentures, shares of more than 10 lakhs, that can trigger. If you purchase any shares more than 10 lakhs through your brokerage, the brokerage will report. Now, generally, what happens is, although this is aggregate value across accounts, then but then for the it's basically for the per financial institution. For example, you have like your account in Zerodha, and you purchase any new shares more than 10 lakhs through Zerodha. Zerodha will have to report that your particular account to the income tax department, right? And then if you have any shares transactions and you don't report income from share transactions in your tax return, although it may be less than whatever 1 lakh and it's exempt under 1038, you need to disclose in the schedule EI, which is the exempt income, that okay, this much income was their income, but it was exempt from tax. Even if you do that, then tomorrow income tax department cannot put a concealment penalty to you, right? So you need to take care in your tax return, ensure that all and every income, if you, even if it is an exempt income, for example NRE fixed deposits, it's a interest from NRE fixed deposits is exempt, better to disclose that income in schedule EI, right? Then purchase buyback of shares or purchase of units of MF other than an inter scheme transfer. So if like it's not, if you transfer the money from one scheme to another, that is not reportable. But you purchased or buy back shares or purchase the units of mutual fund. Mutual fund is also covered more than 10 lakhs during the financial year. Sale of foreign currency or credit to foreign exchange card or expense, traveler check, drafts more than 10 lakhs. Purchase or sale of immovable property. This is very important. More than 30 lakhs. Either the sale consideration or stamp duty value. Now, any property you go in any of the normal metros or many tier 2 cities even, it's more than 10 lakh, 30 lakhs only, right? So this is a very low threshold. So practically any immovable property you purchase or sell in India, you need to be very very careful that year your tax return may be open for scrutiny purposes, right? So you need to be very careful in terms of your whatever transaction you have done, including the capital gain in the tax return. If you are claiming any deductions, you claim the deduction properly. If you have like deducted any TDS, depositing that TDS, having the TDS returns in place, right? Okay. Receipt of cash for sale of goods and services. If you do any sale of goods and services and you receive any cash more than 2 lakhs, that is where you can get a tax notice. Capital gains. Now there are certain things which is not reportable, but basically they need to be reported to the income tax department, because now income tax department, what they have done is that they are trying to pre-fill your tax return as much as possible. So when you file your tax return, to make it easy for you, they will pre-fill certain details like capital gains on transfer of securities, mutual fund units, or dividend income, interest income. They will try to pre-fill everything for you, so you have to do little as little work as possible. So any such capital gain, MF, dividend, interest income, all these things are also reported to the income tax department. So the income tax department has this information which they can use to. So for example, income tax department has the information that I you have a 10 lakh capital gain, and when you file the return, they will wait till you file the return, and when you file the return, you have not disclosed that amount in your tax return. So automatically they can send a tax notice that this was the income that was reported by the financial institution and you have not, please let us know the reasons for the same. Many a times there are errors also in this whole process. There are errors by the income tax department, so that is also the possibility, right? So the point to remember is that you should always file the tax return every year, even though you are not required to file. My advice is that if you are a non-resident and you have any financial interests in India, or you want to return back to India at a later date, always file a tax return. It just takes a few thousand rupees, but peace of mind is there, continuity is there. You are saved from kind of getting notices that you have not filed the return, right? Disclose the income properly, right? You disclose the income, whatever is there, in a proper way, right? Spend time on your tax return, disclosing the proper incomes. Have an explanation for each the credit entry in your bank account. Even though the income is not taxable in India, but any credit, for example, even a credit, I've made separate video on whether an NRE income in NRE account is taxable. In specific cases, it may be held taxable. So you may need to have proper explanation for every credit entry. So generally, when you do your tax, filing work, when you sit for your tax filing, always take your bank statements, all of your bank statements, right? And ensure that you have explanation. Either you have disclosed the particular credit entry in your Indian tax return, right? Or you have disclosed it in the exempt section, schedule EI, or you have a very very credible explanation of this particular income, that it need not be reported in the Indian tax return, right? So you need to have of the documentation also. You should have you can like make small notes, add a separate kind of a column and make the note that this is for this credit is for this credit is for this, at least for the high credits. For very small credits you can ignore, but then the high amount, significant amount, you need to have an explanation ready. What basically happens is that, okay, for today I remember that for 23-24 I have to file the tax return by like June 2024, July 31st 2024. I am very clear that okay, these transactions happen. But what about the transaction that happened like 3 years down, of 3 years back or 4 years back? Because the income tax department has the right to open those returns. So for every year, make a folder in that, have the bank statement. Against that, have a separate column. Make the entries at the time of filing, so that even 4 years down the line, you have an idea that okay, this was for what, this credit was for what, right? So that you should have, right? And avoid cash transactions as much as possible. And the biggest example for that is the real estate transactions, which always have, maximum times it has a white black element, and that creates a lot of complexity. And that's why investing in real estate in India is always, whether you should invest or not invest, again, that's a separate subject. I will make a video on that because of these issues. And do not panic if you receive a tax notice. It's always 90% of the times only for gathering the information, right? It's a auto triggered kind of thing. So do not panic. I'll make a separate video on what you should do if you receive a tax notice, so that I will cover in a separate video. So I hope this was useful. If you have any queries, any thoughts, do share it in the comment section. Thank you so much for watching this video.